$1,000 a year in hidden fees doesn't feel real until you realize it compounds into $10,000 over a decade, and most W-2 workers never audit it. You probably think a $1 million studio tour is irrelevant to your life. You're wrong, and I'll prove it in the next 5 minutes. By the end, you'll know exactly which 3 fee lines to check in your 401 case tonight, how the IRS defines investment expense deductions you're already paying for, and one spreadsheet to calculate your personal fee drag right now. Let's start with the wrong belief most people hold. A $1 million studio tour is only relevant to high-income individuals or large corporations. Here's the correct reality according to IRS Publication 550, Investment Income and Expenses. Investment management fees, advisory charges, and custodial costs are directly tied to your ability to build wealth. A 1% annual fee on a $10,000 investment costs you $100 per year. Over 10 years at a 7% market return, that 1% drag reduces your total return by approximately 10%, the difference between $19,672 and $17,362. That's a $2,310 swing. For a household earning $75,000 annually, that's 3% of annual income lost silently. The delta. Most W-2 workers never see this number. They see the headline fee 0, 75% or 1, 25%, but miss the embedded costs at 12B1 marketing fees, custodial charges, platform fees, expense ratio spreads. 3 fees stacked inside one fund. The cumulative drag hits 1% in the average target date fund, according to recent SEC filings on retail fund performance. Now, the $1 million studio tour. Here's where the financial audit lesson lies. A $1 million studio build-out has line items. Real estate $400K, construction labor $250K, equipment $200K, permits and overhead $150K. Each line item has markup percentages. The general contractor takes a cut. The subcontractors take cuts. Material suppliers inflate by 15–30%. No single percentage looks outrageous until you stack them and realize the original $1 million budget becomes $4 million in actual cost because of layered percentage drains. Your investment portfolio operates identically. It's a stack of percentage drains. First fee, the expense ratio, a 0. 8% index fund doesn't sound like much. That's $80 on a $10,000 balance per year. Second fee, the 12B1 marketing fee. This is buried inside the expense ratio. On the same $10,000 balance at 0. 35%, that's $35 per year. You're paying so the fund company can advertise to new investors. The SEC filings on fund expenses show this is standard but rarely disclosed clearly. Third fee, advisor fees or platform fees. If you use a robo-advisor or a brokerage platform, they add another 0, 25% to 1% on top of the fund's own fees. Stack them, 0, 8% plus 0, 35% plus 0, 5% equals 1, 65% annual drag, not the 0, 8% you thought you were paying. Over 10 years on a $10,000 investment, that's a $4,200 difference in outcomes. For a single W-2 worker earning $75,000 with $50,000 in retirement accounts, that 65% compounding drag costs approximately $1,200 per year. Over a career span of 35 years, that's $42,000 in foregone returns. Here's the IRS angle most people miss. Investment expenses are deductible under IRS Publication 550, Section 230. If you're self-employed or file as an investment professional, which you might be, even as a W-2 worker if you actively manage a brokerage account, you can deduct investment management fees on Schedule A, line 16, but only if they exceed 2% of your adjusted gross income. For a $75,000 earner, that's only deductible if fees exceed $1,500 per year. Most W-2 workers never hit that threshold, so they can't deduct the fees they are already paying. The hidden implication: you're locked out of a tax break because your fees are too small to matter individually, but large enough to compound into serious money over time. This is the fee structure trap. The alternative reading of the $1 million studio tour is this. It's a transparency test. If you can audit the cost structure of $1 million build-out, you can audit your own portfolio. Both operate on layered percentage drains. Both hide their full cost in line items and fee schedules. Both require you to ask, what am I actually paying? 3 actions to take tonight. 1. Log into your 401k or IRA provider. Find the fund fact sheet or prospectus. Note the expense ratio top line. 2. Search that fund name plus 12B1 fee on your provider's website. Add that percentage to your expense ratio. 3. Check your statement for any advisor fee, platform fee, or account maintenance charge. Add that too. That's your true annual drag percentage. Multiply by your account balance. That's your real annual cost. Over 10 years, assume 7% market growth and calculate the delta between that scenario and a 0.3% index fund alternative. That's the money you're giving up. Same facts, different reading. Follow the trail.